Do you want to start investing but don't know where to begin? Welcome to our Investing 101 guide for millennials. Let me tell you a story about Sam, a millennial who transformed his finances through smart investing. Sam started by understanding the basics, saving a portion of his income and setting financial goals. Firstly, he learned about the power of compound interest and how it could exponentially grow his investments over time. Secondly, he diversified his investments, spreading his money across stocks, bonds, and real estate to reduce risk. Thirdly, Sam took advantage of retirement accounts like 401(k)s and IRAs, which offer tax benefits and help in long-term wealth building. He also educated himself about index funds and ETFs, which provide low-cost exposure to a broad market. Finally, Sam stayed consistent, regularly investing a set amount, regardless of market conditions. Now let's break down these steps further. These are the essential steps for successful investing. Firstly, compound interest means you earn interest on both your initial investment and the interest it accumulates, making your money grow faster over time. Secondly, diversification involves spreading your investments to manage risk and increase potential returns. Thirdly, utilizing retirement accounts can offer significant tax advantages, making them essential for long-term investing. Fourthly, index funds and ETFs are great for beginners because they offer a diversified portfolio with lower fees. Fifthly, staying consistent with your investments, regularly contributing regardless of market conditions, is crucial for long-term success. Remember, starting early and staying consistent are key to successful investing. You don't need a lot of money to begin, just start with what you have. Show empathy towards your financial struggles. The best time to plant a tree was 20 years ago. The second best time is now. Subscribe to Financial Freedom for Millennials for more exciting content.